Hello, ladies and gentlemen. How are you all doing today? Hope you had a great day yesterday, a great expiry. Remember, I had told you not to buy in Bank Nifty unless and until we close above 24,000 levels with strong volumes and good buying signs. And Nifty, unless and until goes above 12,030 levels, don't buy. It made a high of 12,022, and the first support levels psychologically that was supposed to be 11,900, 800, all of them majorly were broken. So today's session is going to be very, very different. I have given it a name, the big picture. So I'm going to share $1 million information with you. If you master this information, master this technique, master this art, it would become very easy to make money from the stock market. Understand, it is a big sea, an ocean where money is flowing all across the board. All you need to know, what is the direction of the money flow. If you understand the direction of the money flow, you would be able to make money in the direction of it by trading in the direction of it. So that's the reason why I am calling it a big picture. So let's first take a look on what exactly has happened in today's trading session, how things have shaped up, and how has been the data. Then I will take you today directly to the charts. And today's charts is not going to be just like every day I tell you, this is what happened, this is what happened, this is what you should be expecting, there's support, resistance, and all of that. We are not going to talk any one of that. Today I'm going to share $1 million information with you, a secret, a thought process basically. I will suggest, if you're anywhere interested in stock markets, mutual funds, anyhow to invest money, make money, and get return, then you should master this particular art. You should think in this way, and trust me, if you do this, irrespective of the industry, sector, or whatsoever it is, you can do wonders. Rest. So let me quickly, first of all, share my screen with you and show you what exactly I'm talking about. First of all, before we go and understand anything, there is one thing very basic that you need to understand. You might have heard me talking about the four seasons method. Now, what is a four season method? Basically, stock market in a whole has got four different cycles and four different phases. That's what we call a four seasons method. So there is a buying force that comes into the market, buys things, and we see a good accumulation happening. Then markets go up, then stall for some time, then profit booking happens. That's what we call the distribution period. Then markets goes into downtrend. Then again, once things are sold off, what was bought in accumulation, it undergoes a cycle of down cycle, and that's what we call a downtrend. And post that, once the downtrend is done at the bottom levels, once again there would be a period of accumulation when prices will be very attractive, new money will be coming in, looking at the cheap stocks, cheap prices, and that's what we call a accumulation period. And times the accumulation periods are very volatile. You will see very sharp ups and downs. At times the accumulation period would be a subdued consolidation. You would see a complete range bound markets for a longer period of time. So that's the distribution phase. Then you would see some kind of breakout on the upside, new bulls coming into the market and taking the control over from the bears. Bears resistivity goes away, and then we get into an uptrend again. So basically the market revolves into cycles of accumulation, uptrend, distribution, and downtrend. So this cycle keeps on revolving throughout the year, and traders, we just try and keep predicting whether markets will go up or down. At times you make money, at times you get your stop losses hit, at times you get your targets hit. So that's not the point. The point is you need to understand what is happening on the bigger picture. What is the money flow? If you crack the code of money flow, you would understand which side to trade, what exactly to trade, what to buy, what to sell. Now, having said that, let's take a look on the data, what has happened today, and then I'll share what exactly I have talked about right now. So starting with today's data, very simple. If you look at all the indices, it was a negative day. Let me just bring it here. Banking index was the worst performer, with proudly down by 3.36%, Nifty 50 down by 2.4%, private banks negative over 3%, financial services negative about 3%, IT about 3%, PSU bank 3%, media 3%, service sector, financial services 25-50, reality all over negative by 2%, energy negative by 2%. none of the sectors, even metals, PSUs, consumptions, none of the sectors were actually positive in today's trading session. If you look at the fund flow, you have some 600 crores of selling, delivery selling done by foreign institutions, 800 crores selling done by domestic institutions, and index options have been bought about 1,324 crores. So this was the expiry day. And in yesterday's session as well, we had a big option unwinding of 2,500 crores. So this looks like a fresh buying of options. So it could be a protection buying, that's put buying. Rest on the stock futures was bought about 220 crores by foreign institutions, and stock options sold by 140 crores. So that's the data. So two things: number one, big sell-off from institutions; number two, high volatility, 9.2%. This is exactly I talked in the morning video. We can see the Bollinger Band expanding. It means that the market is entering into a high volatility range. So you can see right here, it happened, 9.2% volatility up. The fear factor is high. Now, let's simply go to the charts. Let's see what has happened, and then I'll tell you the bigger picture. So starting with, let's say, Nifty. So big sell-off candle. If you see, markets had started going up from 10,800 levels, then it made a high of 12,000 levels, and there was indecision continuously. Two spinning tops, two doji candles, 4 sessions of indecisiveness. Now in an uptrend, bulls are here, but now it's indecisive. It means the bulls are fading off. It means the bears are attacking now, which actually means 4 sessions of indecisiveness controlled by bears. It's a bearish engulfing pattern that's actually engulfing 6 trading sessions. So please don't take it lightly. It's a big selling force that has appeared in today's trading session. Now, one thing very important, if you talk about in terms of direction, all the major stocks of the Nifty and the markets that we call big boys, they are negative. Let's take a look on some of them. Asian Paints, it's a paint sector, it's a different consumption industry altogether. It's a different sectors. We any which ways have a positive view on painting because it's Diwali and festival season. So they usually have higher sales during this period. Auto industry, higher sales, two-wheelers, three-wheelers, two-wheelers, four-wheelers are purchased during the festival season. Now look at the other stocks. Bajaj Financial Services, Bajaj Finance, Bank of Baroda, all negative by 3 to 4%. Banknifty itself 3.36%. SIPLA negative by 1.6%. Dr. Reddy negative by 1.3%. HDFC 1.6%. HDFC Bank 3.5%. The big boys. ICICI Bank, that's 3.88%. Then we have Infosys down by 2.5%, ITC down by 1.6%, Larsen and Toubro down by 2.88%, Mahindra and Mahindra 1%, Maruti 1.57%, Reliance down by 3.5%, State Bank of India down by 3.6%, Tata Motors 2.87%, TCS down by 2.5%, Tech Mahindra over 4%, Ultratech Cement 1.3%, Wipro 2.5, Z Media 3.36. So all the major stocks of the markets were negative. The big boys, the ones who have capacity to change the entire direction of the market. So having said that, one thing is very clear. I was warning you to keep booking your profits on higher levels. So exactly same thing has happened. So we can clearly see markets have got a strong resistance. And if I show you the chart of Banknifty, it's again one thing very, very important. If you look at it, we are getting resistance at the 50% retracement level of this entire corona crisis, which actually means in case we, in the first recovery, when we made 25,000 levels, we didn't even touch 61%. And now we got a resistance on 50%. So which means this trend may have the chances to resume, or it may at least test the 38% retracement that's placed around 22,000 levels. So in case even if we go deeper to 23% retracement levels at the bottom, that would be some 19,800 levels. So again, I'm not worried about that right now. That's not the bigger picture. Let me show you the bigger picture. In stock market, everyone is running behind knowing whether it's going to be whether it's stock is going up or down. That's not the point. The point is where which force is ruling. Eventually there are buyers and sellers, nothing else. You need to identify which force is ruling. For that you need to know the entire story of the market. So now I'm going to share the story of the market. Let's take a look at this chart. Let me share my screen once again. So just take a look at this particular chart. Now this chart has data from September 2020, September 2019. So this is the period when markets were up. This is the bulls period when bulls were ruling the markets, this upside that started ending in the month of January. And from here till here, we have got this big red triangle. This is where the bear forces were active. And then toward the end of this, if I just zoom it for you, the bottom range of Nifty, what was happening is even the sell-offs were being bought back, very vigorously. So basically what is happening, all the selling is converted into buying. So this is the place where bulls were taking control off from the bears. So here actually the bulls taken control and market started going up. Now let me zoom it a little bit. Now this force that started here, this bull market, so this is the time range, the big green arc that I have drawn. This is the rally of 7,500 or 8,000 levels till 12,000 levels that the bulls have enjoyed. Now, in between this, if we segregate the place where bulls took control and rest of the 3 to 4 months, it would say, see, this uptrend was not that strong. The first uptrend from 7,500 to 10,000 prices, they were very, very, a strong rally. Then we had a kind of sideways to upward sloping market for good 3 to 4 months. So this I call playground of the retail traders. So basically, if I revise the story, bulls were here, they sold off, bears took the control, bulls got into activity, and here in this small red triangle, first bear attack was there, but again, this bull force as it was developing and the bear force that has gone off, this got defeated. Eventually bulls took the control, kept the control, ridden the rally. In between this, retailers came in this blue rectangular area, they played, markets went up, down, up, down, up, down, things happening. Now if you now closely look at what has been happening since few days, do you see this big red candles, this one and this one, and look at the volumes, the way it's rising? So all I'm trying to say, bear forces are extremely, extremely strong at this point of time. Now, I am not saying that markets are going to crash or markets are going to fall. All I'm saying is bear forces are getting activated. Now, if bulls are stronger enough, they will come back, fight it back, and market will go into the uptrend. Keep a very close look on how market shapes up today onwards, and what is the volume profile with the price action. That's something very, very important you need to keep a note on. Now there's only two possibilities: either markets are saturated on the uptrend and we are looking forward for some corrections, or it could be bulls are even stronger enough to take the markets to new all-time highs of 12,500, 600, 13,000, whatever it is. But I personally am not convinced that market should be making new highs, because see, you have a 34 PE, historically 20 years highest PE ratios on Nifty. Then you have World Bank saying that your growth will be contracting by 10%. Your RBI says your growth will contract by almost 9.5%. There is no reason why your markets will make all-time highs. There are lots of reasons. Even the US election doesn't have any certainty. So bottom line is, at times we call it a, we have heard people saying there are people who manipulate the market, big FIIs, domestic institutions, big players, operators. You can name it anything. I am not arguing that these are not right. All I'm saying is there are 10,000, multiple factors that trigger a buying activity, and there are multiple factors that trigger a selling activity. You name it, an operator, market mover, market maker, bulls, bears, whatsoever it is. It's basically the flow of money that's getting affected because of some XYZ thing. It could be a chart development, it could be a news, it could be a virus fear, it could be GDP growth, it could be World Bank, it could be RBI, government, elections, fear factor, protection, or simple profit booking, or it could be operator driven activity, it could be anything, it could be a terrorist attack for that matter, that can bring down the markets and bulls may come back again. So basically, bulls and bears are the two forces that driving the market always in their direction. Now, if I'll take you once again to give you a summary of the story that I am trying to tell you, the summary of the story is: big bear force were active, bulls taken up the control. Now bears again look coming back into the picture. Keep a close watch on volumes and plus the price action. If markets continue to trade below, so far Nifty is above its 20 days moving average. I had warned you Nifty is almost 500 points above the 20 days moving average. So be precautious. We can see a correction. So 20 days moving average is placed somewhere around 11,500. So unless and until we are above 20 days moving average, and 50 DMA is placed at 11,400. So 11,400 is to 500 is going to be very, very crucial. In case this is broken, you can be sure of a downtrend. In case this is not broken, there are still hopes of bulls coming back into the picture. So keep an eye on whatever the price action happens, and associate it with volume, because the big two red candles that we are seeing, these are very strong forces you need to keep an eye on. So again, as I said, markets have got an uptrend, downtrend, accumulation, and distribution period. So having said that, if you apply the same, it was first into uptrend, then it got into distribution between September to January, September 19 to January 2020. Then there was a downtrend. Then again, in this one couple of months period, we got an accumulation happening. Now we had an uptrend till the month of September or October beginning 2020. Rather, to be more precise, till the month of August, there was an uptrend. On 31st of August, the first time when Nifty made a big red candle with big volumes. If you see at the bottom, this big red candle, big volumes. Nifty fell by over 1,000 points. Then we had a recovery, but this recovery was not supported by volumes. Once again, we have a similar black red candle. That's again with good volumes. Now, what is this red candle about? Let me show it to you. Let me zoom it a little bit. If you see, a market was going up here, but again, it was indecisive, small bodies, small bodies. Then we had a big downside, big red candle. That's a bearish belt candle, open towards the high, made a big low, closed around the lows, big red candle, engulfing 4 to 5 sessions. It was a very strong force with volume that dropped the market to 1,000 odd points. Then we had recovery. Once again, we have a similar bearish belt with bearish engulfing pattern, engulfing 6 trading sessions. This time it engulfed, I guess, once again, 3, 4, 5, 6. Okay, once again, 6 candle were engulfed by this big candle as well. Once again, same thing has happened. So keep a close watch to understand whether now markets are saturating and getting back into the bear grip. If that happens, my friend, uh, in case, even if it's in case a 10% retracement, we are talking about 10,800 levels on the downside. Or in case it could be a downtrend, then we could be talking about 10,000 levels. That's where the actual initial bulls were convinced that this is where markets would be, because if you understand this area, there was lots of volatility, but market stabilized around 9,500 to 10,000 levels. So in case this 10,800 is broken, we could be looking forward for 10,000 prices. Be very, very precautious. Either I am expecting very soon bulls will come back and markets will go up. I will give you the buy signals as well. Rest, this may convert into a very deep correction. So I hope you was able to understand the entire money flow. It was into buying, then selling, accumulation happened, buying happened. Now we are getting signs in last 1 month of the bears attacking with more power. Now you understand, you think about yourself. You have a position in which you're already 30% in profit. Now market starts going down. Now your profit is down to 20%. What would you do if tomorrow it falls again 5%? You would be in rush off saving or protecting your profits. You will buy puts, you will sell your position. That will trigger a selling activity. If you are a bear, what would you do? You are looking forward some breakdowns below this 20 days moving average, 50 days moving average, all different technical indicators, this bearish engulfing pattern, this bearish belt line pattern, and you're finding some technical reason to sell off. So you could have some fundamental, or you could be some fundamental a guy who bought at the bottom. Now you're looking at the higher valuations of Nifty 34p and you are selling off looking at the higher valuation. Reasons could be 10,000. Bears have enough reason at this point of time to go aggressive. That's all I'm trying to say. And it looks on the chart. We are not predicting what's going to happen. We are just trying to read what is happening. That's the reason I had sold off my 50% portfolio on the 12,000. Then again, I sold around today as well when Nifty did not go over 12,030 levels. So around 11,900 levels is what I sold off some of my portfolio. So I'm right now sitting at 70% cash. Rest, let us see how exactly things develop. So this is the holistic view and the picture that you need to keep while trading, while taking up your decision. When you have a bear force acting in the market, you'll probably be less aggressive in your buying position, your buying trades on stock specific trades. Consumptions are still positive. If you remember, Hindustan Unilever made its 52-week high when Nifty was back into 8,500 levels. That was the almost bottom of the market. So stock specific actions would be there. Markets, overall money flow, overall direction, that's a different thing altogether. So at this point of time, it's very, very important for you to be precautious. If you have a portfolio and if you're not exiting, at least you should be thinking to protect your profits. So hope this information is going to help you in taking your buying and selling trading decisions. And that would be all. Thank you so much for listening and watching. Abhishek Raj signing off. Stay healthy, stay wealthy. And if you feel like you need any information, support, you want to learn something about the markets, approach me directly anytime. I'm available. Thank you so much. Abhishek Raj signing off. Don't forget to like, share, and subscribe.